Welcome to Ecoholics. In this video, we will discuss about the recent tussle between Reserve Bank of India and Ministry of Finance. So here in this video, I'll explain what are the roles of Reserve Bank of India as well as what are the responsibilities of the Government of India with respect to the independence given to the central bank of our country. First of all, in this video, we will discuss what are the roles of Reserve Bank of India. First of all, the roles of Reserve Bank of India is simple. There are two roles. First one, having the controlled inflation. So by making monetary policy, Reserve Bank of India needs to control inflation as well as without undermining the GDP growth rate. It means maintaining the inflation rate without undermining the potential GDP growth rate of the country. Now in this video, we will discuss about what is monetary policy and what are the roles of monetary policy committee. We will not discuss about the construction of the constitution of this particular monetary policy committee, but we will discuss the role of Reserve Bank of India. So here there are two roles of a monetary policy. So monetary policy has two roles. First one is of price policy. It means related to the inflation. And the second important is quantity of money. So here there are two important parts or the divisions of monetary policy. First one is price policy, that is related to inflation, and the second one is quantity of money. So that is liquidity of the particular currency. So here there are two roles. It means maintaining the liquidity of the money as well as controlling the inflation. Now what is the real scenario in the present time? It means this Reserve Bank of India is the regulator. So Reserve Bank of India is the regulator of all the commercial banks in our country. So this is the same role of central bank of any particular country. Here under Reserve Bank of India, there are roles like controlling the other banks. It means the commercial banks. Now apart from this, there are other certain duties like controlling of inflation, etc. It means the Reserve Bank of India requires some kind of independence. But there is a problem from the government side. Like from the Ministry of Finance, there is a problem in regulating. So if the question arises that who will regulate the regulator, because here if a regulator is not taking correct policies and undermining the potential GDP growth rate of the country. So in this video, I'll give you some concrete data that how RBI is possessing or undermining the GDP growth rate of the country by assuming higher and higher inflation in comparison to the actual inflation. So here this particular inflation is mainly the policy of monetary policy committee. This monetary policy committee works under Reserve Bank of India, and under this monetary policy committee there are few members that I had discussed in separate video. For that monetary policy constitution, you can refer to that video. This monetary policy committee always undertakes the interest rate policy. So this monetary policy committee controls the interest rate. Here the interest rate, that is what we call benchmark interest rate, is known as a repo rate. So here repo rate is one of the important rates because all the policy rates are linked with this particular rate. Here after that, this repo rate is announced by this monetary policy committee. But in the recent spate, there's one deputy governor came out in the public and said that RBI should keep the higher and higher interest rate. It means what are the demerits of keeping the higher interest rate? I'll tell you in few minutes. But this MPC concept was originated from the country called New Zealand. But this New Zealand is the first country to abolish the monetary policy committee. So MPC in the New Zealand has now been stands abolished. It means there are some kind of demerits under monetary policy committee. With the help of some data, I'll tell you how RBI is every time overestimating the inflation rate and keeping the repo rate high and high. So if we take the data of last 24 months, the inflation rate in the last 24 months means October 2016 to October 2018, for the last 24 months was around 3.8%. And if we take last 36 months, it was around 4.3%. It means according to Monetary Policy Committee, the inflation target set by Monetary Policy Committee is 4% with a bar of plus minus 2%. It means you can deviate to 6% and you can come down to 2%. This is the limit. So it means always the inflation remains under control for the last 36 months. It means by keeping high and high repo rate, like for example 6.5% is the current repo rate that was announced in the recent Monetary Policy Committee. So 6.5% is the current repo rate, and if this repo rate is high in comparison to the inflation, then this is not justified, because this will undermine the investment in the economy. Now for example, investment does not come from these particular activities. Investment will come only by the sentiments. So investments, it means these inflation rate does not affect the investment, but this inflation rate does affect this repo rate, and this repo rate ultimately has some effects on the rate of loan given to the industry. If these industry will not able to avail the cheap interest rate or cheap loans, then they are unable to fund that particular infrastructure project or particular investment projects. And if you are not able to fund that particular investment projects, then it is very difficult to pay for their non-performing assets, because the country or the particular Reserve Bank of India, the main problem is to how to tackle these non-performing assets. And other problems are also having, like NBFC problem. Other problems are government, RBI is having surplus amount of money that government is eyeing to fund its fiscal deficit. So here there are few problems in front of Reserve Bank of India, because this particular repo rate is the third highest in the world in the last 36 months. It means just behind Brazil and Russia, India's repo rate has the third highest in the world when we compare to other countries. Now apart from this, there is also a concept of a real repo rate. So here the concept of a real repo rate. What's the meaning of this real repo rate? It means the repo rate, that is 6.5% currently, minus the rate of inflation. So here the real repo rate is around 1.5%, and according to the target given by Monetary Policy Committee, the Monetary Policy Committee targets a real repo rate at 1.25%. So this is the target real repo rate, and this is the currently. It means this Monetary Policy Committee having surplus of 25 basis point. So 25 PPS is above than the target of Monetary Policy Committee. If we think about in the previous 24 months, the real repo rate in the last 24 months, the time period is same, October 2018, October 2016 to October 2018. So these 24 months, under this 24 months, the real repo rate was around 2%. And if we think about 2.4%, and if we think about 36 months, last 36 months, the real repo rate was around 2%. It means way above the target of Monetary Policy Committee. Now understanding this particular example, like under the governorship of Raghuram Rajan, so under Rajan, there was a target between 1.5% to 2%. And at that time RBI was aiming for the target of real repo rate at 1.7%. So here the repo rate is more or less in a comfortable position. Then the question arises, why RBI is keeping higher repo rate? Now we will discuss some of the demerits of having high repo rate. Here high repo rate, there are certain demerits, like first one. So this will have impact on investment. So whenever you will keep higher and higher repo rate, it means the loan availability to the industries will be low or will be costlier. If these loans are costlier, investment will certainly come down. The second point, it will worsen the situation of non-performing asset in the country, and you know that this is the biggest problem that banking sector is facing in the recent years, that is non-performing assets of the banks. So these two we can consider that's a very major problem in where we talk about the particular things like RBI is keeping higher and higher repo rate. So in this video we have concluded that RBI is assuming higher and higher inflation rate, that is why they are keeping higher repo rate. If they will decrease the repo rate, then that will be helpful for boosting the investment in the country. Hope you like this video. Please give a like, and if you have any doubt or if you want to appreciate this initiative by Ecoholics, you can mention in the comment box. You can also download the Ecoholics app for the full courses regarding Indian Economic Services, Economic Optional or UGC NET examination. Once again, thank you so much. Please don't forget to subscribe this channel and click on the bell icon. Thank you so much.